So, welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. Today we'll be mixing technicals with fundamentals, and we'll make a start with Euro USD. And a quite interesting twist of events. We had the US employment report for September on Friday, which more or less tended to highlight the resilience of the US employment market. It was characteristic that the NFP figure shot through the roof. It was far higher than what was anticipated. It was actually expected to drop to 107K. It rose to 330 plus, which more or less may sharpen the Fed's hawkish rhetoric and maybe actually preparing the ground also for another rate hike on behalf of the bank. Overall, I would highlight here that at the time of the release, we saw the US dollar getting some substantial support. Gold's price tended to weaken due to US dollars strengthening, but also due to the rise of US yields. On the flip side, the release provides some support, but it was short-termed. The dollar ended the day in the reds and gold rose, while US stock markets, despite suffering a hit at Friday's opening, more or less were able to end the day in the greens. And that showed exactly the reversal of the market sentiment. Nevertheless, we may see a Fed being more hawkish than expected. However, there is a precondition here, and that's practically the US CPI rates, which are due out this week. They are for September. Should there be an acceleration, or even should the CPI rates fail to substantially weaken, that could sharpen even further the Fed's hawkish stance and prepare the ground for another rate hike. On the flip side, should the US CPI rates actually slow down, that would more or less allow the Fed to maintain its interest rates unchanged. So practically that would lead to the bank remaining on hold. It's quite an interesting twist of events on Friday which happened, and that would also create some turmoil regarding our global trading competition right now, which is ongoing and it's pretty much exciting. I would be highlighting that the first round is already on, which is quite interesting, with 2023 Land Rover Range. The value it's worth around $60,000, and it's quite exciting, people. Now back to the fundamentals. What else is new? Now we had the conflict in Israel heating up once again. We had practically Hamas fighters entering and kidnapping Israeli soldiers as well as civilians. Pretty ugly. Of course, on the other hand, what the Palestinians have been suffering for years now is also not nice. We have to highlight here, though, beyond any politics, the big question is how could that affect the market? Now, on the one hand, we may see more support for safe haven instruments. I would also highlight the possibility of a rise in oil prices, which would be quite interesting. And that could more or less raise inflationary pressures across the board, which could in turn lead to stricter monetary policies from central banks and slow down economic activity. So it's a big issue for the time being. I wouldn't say that we see a substantial market reaction just yet. We see that later on as well. On a technical level, we start with the European theater. We had Germany's elections in Hessen and Bavaria yesterday. The opposition party, CSU, CDU, won. That was clear, even with CSU in Bavaria suffering a slight setback. The rise of the AfD was more or less verified, and the weakening of the coalition parties tended to be obvious once again. So that's an issue for German politics, which may create some turmoil, but for the time being, I would note that it passed under the market's radar. Euro USD remained rather stable, actually edged a little bit lower, but nothing substantial. For the time being, we tend to maintain a bias for the sideways motion between the 1.0580 and the 1.0460, basing our approach practically on two elements. The first would be the fact that there was, around the last days of September, a steepening of the downward slope directing Euro USD, and that has been broken on Friday, remaining practically in a sideways motion, allowing it to remain in sideways motion. The RSI indicator is just above the reading of 50, implying a rather indecisive market, which more or less may allow the pair to remain between the R1 1.0580 and the S1 1.0460. We can see that it was tested the R1 once again on Friday. However, it managed to suppress the price action below it once again. On the other hand, if we drill to the daily chart, I think that would be more obvious. We can see practically a wide downward motion since around the mid of July. Let's have a look to be more exact. Since the 18th of July. And the downward trend line remains intact. So we may see bearish tendencies re-emerging. Let's drill back to the forward chart for the pair. Now, should the bears take over once again, I wouldn't be surprised to see the pair aiming, if not breaching, the 1.0460 and start aiming for the 1.0315. On the other hand, should the pair remain in sideways motion as expected, I wouldn't be surprised to see it testing the second downward trend line and remaining in the room, the corridor if you prefer, between the R1 1.0580 and the S1 1.0460. For a bullish outlook, I would require a clear break of the downward trend line, once again signaling the interruption of the downward movement, but also a break of the R1 1.0580. We will require a higher peak than this one. And in that case, we may see it start aiming for the 1.0670, practically the way it will be open, given that the next peak would be here. It's going to be a quite interesting next 24 hours to see how the pair will continue to react. I would be highlighting that on the euro side, okay, we had already the Sandix index for October of the Eurozone. And next big issue for the next 24 hours for the euro side would be ECB policymaker Klaas Knot. He will be speaking. He may lean more towards the hawkish side, and if that's the case, we may see the euro gaining some ground. It's going to be, once again, an interesting read. Okay, let's have a look at cable. Let's readjust a little bit the labels here. Here you go. Now GBP USD remained in a sideways motion. Let's zoom out a little bit. I think it will become clearer. We can see that the downward trend line, practically the steepening of the downward slope of the downward trend line, has been broken. It's very characteristic. For the time being, though, we tend to maintain our bias for the sideways motion to continue. Let's readjust once again the labels a little bit. Any upward tendencies which were interrupted on Friday practically have been broken today as well. It's characteristic if we draw an upward trend line here. That has been broken, so that's out of the question. And that would become even more obvious in the 1 hour chart. You can see that the sideways motion prevails. Back to the 4 hour chart. So we tend to maintain a bias for the sideways motion to continue between the 1.226 and the 1.2065. More or less, the slight narrowing of the Bollinger Band tends to also provide the idea of low volatility, which could allow a sideways motion, while there are indicators on the reading of 50 implying rather indecisive market right now. But we have to note that over the past 1 week, the pair's RSI indicator in the 4 hour chart did not distance itself so much from the reading of 50. So that tended to imply that there was always some slight uncertainty about the future direction. Should the bulls take over, we may see the price action of cable rising, breaking the R1 1.2260 and start aiming for the 1.2375. You can see right now that the guys at research just sent me the following picture, which tends to imply another upward trend line, which goes like this. Anyways, for a bullish outlook, I would require the pair to break the 1.2260 and start aiming for the 1.2375. Definitely, I would require a higher peak than this one. In my opinion, that's the key point. We need higher lows, but also higher peaks. So the next peak for a bullish outlook has to be at a higher point than this one. So the R1 has to be broken, and the price action has to start aiming for the 1.2375. For the time being, we tend to maintain a bias for a sideways motion to continue between the 1.2060 and the 1.2065. And for a bearish outlook, I would require the pair to drop below the S1 1.2065 and start aiming for the 1.1925 down here. Moving now to USD JPY. There we go. Once again, sideways motion prevails, even more intense here. And it's characteristic that on Friday, the correction lower was even narrow in USD JPY. That was a result practically from a weakening JPY side of the pair. So that allowed, in a more clear way fashion, USD JPY to maintain a sideways motion between the 149.90 and the 148.40. It's actually in the mids. Pretty low volatility. We tend to maintain the bias for the sideways motion to continue. Once again, for a bullish outlook, I would require a higher peak than this one. So the price action has to break above the 149.90 and start aiming for the 151.90. While on the flip side, should the bears take over, we may see the price action dropping, breaking the 148.40 and start aiming for the 147.50. If you guys have any questions or would like to see any charts we're offering, please let me know in the chat box. If we don't make it today, we definitely will have it tomorrow. Moving now to AUD/USD, commodity currency Aussie. And that's interesting. Let me readjust slightly the labels here. It's interesting how the 0.6380 resistance line held its ground and practically allowed the sideways motion to prevail. What would be interesting also here would be to see, I would like to have a look at the minute chart and exactly the moment when the US employment data for September were released on Friday. Give me a sec, please. Yeah. We saw a wide drop of the pair in the form of a negative gap around 30 pips. It was very characteristic. Note how the Bollinger Bands widened instantly. But overall, the pair failed to actually provide or to get any substantial support. Once again, sideways motion seems to be prevailing, and the RSI indicators are along the reading of 50. It's actually at 51.7, also implying an indecisive market. For a bullish outlook, I would require the pair to rise, break the 0.6380 and start aiming for the 0.6510. While on the flip side, we may see the price action dropping below the S1 0.6285 and start aiming for the 0.6170. Now, on a fundamental level, the Aussie as a commodity currency tends to be quite sensitive to market sentiment. Should there be a more risk-on approach by the market, we may see the Aussie getting some support and being able to rise against the US dollar substantially. I would be also noting for Aussie traders the release of China's trade data, especially the import growth rate for September. While on the USD side of the pair, it's not only about the US CPI rates, I would be also highlighting the release of the Fed's meeting minutes on Wednesday. And should the document more or less show a more hawkish stance on behalf of Fed policymakers, I wouldn't be surprised to see the US dollar getting some support. Okay, let's have a look at USD CAD. Let's readjust the labels. Now in USD CAD, there was a downward motion which prompted the pair to actually break the 1.3690. I would be noting that there was a simultaneous release of both the US and Canadian employment data for September back on Friday. Once again, let's have a look at the movement here. Okay, there was some support for the US dollar. But that's not the point. Give me a sec. It was. So there was some support for the USD at the moment of the release of the US employment report, but given that the Canadian employment data were also not that bad, that allowed practically the market reaction to be minimized on USD CAD, as we had conflicting data coming in. Back to the 4-hour chart. Definitely the 1.3690 has to be turned into a resistance line. Let's correct the labels as well. Starting with the R3, which is now being placed at 1.3860. VR2 at 1.3775. VR1 used to be the S1, now it's the R1 at 36.90. Now placing the first support line at 1.36. Second support line at 1.35. And third support line at 1.34. Now there seems to be a downward trend line guiding the pair. Allow me to drill into the 1 hour chart for more detail here. Well, the previous upward movement was interrupted, that's clear. Back to the 4 hour chart, here you go. Now USD CAD seems to be driven by a downward trend line. Yet there are some signs of stabilization. I would be noting here that the RSI indicator, okay, has dropped below the reading of 50, yet remains close by after correcting a little bit higher. And should we see the bears taking over, I wouldn't be surprised definitely to see a low trade on this one. So the pair has to start aiming, if not actually actively test the 1.36 support line. While a possible stabilization would be signaled primarily or firstly by a breaking of the prementioned downward trend line and the price action remaining in the corridor between the 1.3690 and the 1.36. Mind you, today we have Columbus Day. That means it's a partial market close. So some thin trading conditions may be present for the market. It's going to be quite interesting. Should the bulls take over, which does not seem to be probable, but it's still a possibility and should be covered, we may see the price action definitely breaking the downward trend line, signaling the interruption of the downward movement, but also a break of the 1.3690 and the pair to start aiming for the 1.3775 would be required for bullish outlook here. Okay, let's have a look at gold. Back to, let's zoom out a little bit, get more detail here. Readjust the labels. So we see the downward movement was definitely interrupted on Friday. There's no going back here. The RSI indicator has reached the reading of 70, which is quite bullish. So I wouldn't be surprised to see the upward movement being maintained. Yet for a bullish outlook, I would require the precious metal to actually break the R1 1865 and start aiming for the 1900. I think we may see a more intense movement at the American opening today. It's going to be an interesting American opening today. Should the precious metal stabilize, I wouldn't be surprised to see it hitting a ceiling at the 1865 and correcting lower It's interesting also how the price action has escaped above the upper Bollinger Band, which may slow down the bull somewhat. While also the RSI indicator, okay, is still below the reading of 70, yet may be implying that the precious metals price, gold's price, is nearing, has not reached just yet, but it's nearing overbought levels. For a bearish outlook, sorry, I would require gold's price to break the S1 1819 and start aiming for 1785. Okay, let's have a look at WTI. That's an interesting read. Even if we shift the downward trend line to the right, it has been interrupted. So we may see a stabilization of WTI's price. What I would like to note though here is, let's drill into the daily chart. Let me show you something. Note how WTI's ended the Friday in the greens. And during today's opening of the Asian session, practically jumped with a positive gap. Now, on the one hand, we can see that the bears, oil bears, were already hesitating on Friday's closing. So the sell of oil may have been a little bit overextended on Wednesday and Thursday. And practically, I think that the crisis in the conflict in Israel intensified market worries for the possible cause of oil prices and especially the supply side. We have to understand here that the Arabs are quite tense, and that may have an effect also on oil production levels and oil prices. So that allowed for a high push up to reach the 84.30 resistance line. It's correcting lower right now. The RSI indicator is at the reading of 50. We may see stabilization of WTI's price with 84.30 being an axis. That's going to be an interesting movement. Should the bulls regain control and push the commodities price higher, we may see it breaking the 84.30 once again and test the 87 resistance line. Once again, I would require a higher peak than this one. So the 87 has to be reached, and that would allow us to start drawing an upward trend line showing us the limitations of a possible upward movement. On the other hand, should the bears take over, we may see the price action of oil dropping, and definitely we have a mistake here. The S1 should be reading 81.40. Here you go. Anyways, should there be an intense bearish movement, then we may see the price action dropping, breaking the S1 81.40 and moving below it. For the time being, though, we may see stabilization of the commodities price as the market may maintain a wait and see position here. Okay, let's have a look at US stock markets. I would make a start with Dow Jones. Actually, that's pretty much the only one. We may have time for another one. Note how the Dow Jones has been moving in a downward channel. That's more than obvious. However, has hit the floor at the 32,885 and bounced back up, stabilizing somewhat. The RSI indicator, though, is pretty low still. It's at 35.2, which may imply that there's still a bearish sentiment left in the market for the index and could drive it lower. For a bearish outlook, though, I would require the index to drop below the S1 32,885 and start aiming for the 31,840. While a bullish outlook could emerge, should the index be able to break above the 33,740. Now here we have somewhat more complicated fundamentals for stock market participants to actually navigate through. The first would be the strong US employment data, which actually did not seem to bother Dow Jones, as it was able to end the day in the greens on Friday. Let's not forget, this is the daily chart. I would be noting, though, once again, the US CPI rates and the Fed's meeting minutes as the next big tests for Dow Jones and US stock markets in general. That would be one. Once again, should we see the Fed's meeting minutes sounding a little bit more hawkish, we may see a possible hawkish stance on behalf of the Fed actually weighing on US stock markets, while should US CPI rates refuse to slow down, once again, that could weigh on US stock markets as well. And I would be also noting for US stock markets the fact that the earnings season is about to start. We're getting PepsiCo, and at the end of the week, we have a number of banks. If I'm correct, there's Wells Fargo and Citigroup. And we expect that there will be, at least partially, some interest of the market shifting towards US stock markets, which may make market reactions a little bit wider. So more or less be on the lookout for any earnings results, and I wouldn't be surprised to see high-profile companies emerging in the headlines of financial news in the coming days and the coming weeks, in general. So that should sum it up for the day. One quick look only at NASDAQ. NASDAQ, which tended to rise, and that's interesting. It stabilized below the 1400, 1940. So I would expect that this sideways motion, especially if we drill to the daily chart, becomes more obvious, tends to emerge here. Definitely we have to readjust our support and resistance levels. So we haven't visited this index for a while now. So yeah, I would see that the sideways motion is emerging here. So from all of us here at IronFX, best wishes for solid trading.
My name is Christina, and today we will talk about MACD, Moving Average Convergent Divergence, was invented in 1979 by Gerard Apple. MACD is one of the most popular technical indicators in trading. Basically, MACD is a trend following momentum indicator that shows the relationship between two moving average of a security's price. The indicator calculates the difference between an instrument's 26-day and 12-day exponential moving averages, EMA. The 12-day EMA is faster than the 26-day EMA. Both moving averages use the closing prices of the specific period being measured. The MACD generates a bullish signal when it moves above its own 9-day EMA, and it sends a sell sign when it moves below its 9-day EMA. Using the MACD, traders can identify points in the price chart where the trend might be accelerating when the two lines cross. A lot of traders use this for an entry signal. Traders use the MACD to identify when bullish or bearish momentum is high in order to identify entry and exit points for trades. Thank you for watching.
Right, so hey guys, welcome to IronFX webinar series, and today we'll be going through Fibonacci crash course. Okay, so if you guys have any questions while I'm going through, just feel free to type it in the chat box below, and I'll answer your questions straight away. All right, so let's begin. Okay, my name is Woon Hong, and I'm an investment analyst at Everest Fortune Trading Group. Okay, so we have a collaboration with IronFX, and this is for the webinar series. Okay, and this is the disclaimer as usual. Remember that everything in this video is educational in nature, and nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade, okay? All right, so the agenda for today, we have quite a few things to cover through, especially mainly focusing on Fibonacci retracement, extensions, projections, and expansions. Okay, so firstly, we'll be going through Fibonacci retracement essentials. Secondly, we'll be going through ideal market structure, significant swings following market trends. Thirdly, we'll be going through the different Fibonacci retracement levels. And second last, we'll be going through Fibonacci extensions, projections, and expansions. And lastly, the confluence levels that we should watch out for, and how can we combine these Fibonacci levels to show that there is Fibo confluence in here. Okay, so all right, so firstly, Fibo retracement essentials. So the checklist is very simple. We have 4 essential steps. Firstly will be, is the market structure clear enough? Look for big zigzags in the market. And secondly, identifying the recent trend. Prices going down or up. So is it a downtrend or is it an uptrend? Thirdly, to identify recent major swing lows and recent major swing highs. And the last one will be connecting the two extreme points, highest to lowest, which is a downtrend, and lowest to highest for uptrends. So what is the ideal market structure? So these are insignificant swings right here. These swing lows and swing highs are too insignificant, and they are not good to use for the Fibonacci points, because these swing lows and swing highs are too narrow, too small, right? And you are not able to draw it correctly. You may be able to draw it correctly, but these points, for example, you draw from this low to maybe this high, is not efficient at all because these peaks are too small, right? And this is the second example whereby there is these are insignificant swings because again these swings are too narrow and price movement is too small. Okay, so let me just adjust. All right, okay, let's move on. Okay, so here is a correct example of significant swings. We have clear moves up and down and with obvious peaks and troughs. So these are the peaks. The peaks are the highs right here, and the troughs are the swing lows right here. Okay, so we have a very clear market structure and movements. All right, so here is another example of significant swings. So I've drawn out the peaks and troughs to point out exactly how clear it should be, right? You can see right here, it looks like a triangle, right? So you can see right here, these are the swing highs, these are the swing lows, swing highs, swing lows, swing highs, and swing lows. Okay. Next, following market structure. So you can see right here, we have a very clear downward movement. Oh, sorry. Okay, then secondly, the Fibonacci retracement trend line follows the price movement. So if you're in a downtrend, right, you're drawing from the top to bottom. So these FIBs tend to work better on higher time frames. For example, your H1 and H4 time frames, because there are less noise. Less noise meaning there are lesser candlesticks, right, in the market. So your H4s are the ones that are more accurate. And we always say that higher time frame is always king, right? Because it's more reliable in a sense. Okay. So this is what is wrong in a sense that Fibonacci retracements should not cut through two large areas of the market structure. You can see right here, these lows connecting to these highs, you are cutting through this whole area right here, this whole down movement over here. So you should connect from these lows to these highs and not this one instead. Okay, you should not deviate too much from price movement. Okay, excuse me. Okay, so we have a clear market structure right here. We can see the highs, which are this the peak right here, and then the lows will be this area right here, the peaks, the troughs, the peaks, and the troughs. Okay, so you can see very clear triangular looking patterns. So this is what we call unclear market structure, in a sense that price is ranging in this area right here, and there are too many narrow and small movements over here. And then suddenly we have a spike upwards and spike downwards. Okay, so these are irregular movements and it is unclear market structure. So you shouldn't trade pairs like this. So usually this only happens for like a exotic pairs such as maybe GBP, CAD, EUR, AUD, etc. Okay. So what are the different retracement levels? Okay, so we have, of course, in within the 100% and the 0%, we have our 23.6%, 38.2, 50, 61.8, 78.6. Okay, so oh, my screen is not showing. Oh, sorry, give me a, it should show. Oh, give me a second. Okay, is this better? Can you guys see my screen now? Mm, okay, are you guys able to see my screen? Yes. Is visible now. Yes. Okay. So let me just go through again. Okay. So basically this is the checklist. All right. Just now I mentioned, is the market structure clear? And then we should identify recent trend prices going down or up, and then recent major swing lows and recent major swing highs and swing lows. Okay, then we can connect the two extreme points, highest to lowest, which is a downtrend, and or lowest to highest, which is an uptrend. Okay, then ideal market structure. So these are insignificant swings because the movements are too narrow. Okay, you cannot see significant swings. All right, so this is another example of a insignificant swing, because you can see right here the movements are too small and we don't have a spike upwards or downwards. Okay, so these are significant swings, right? A long rally upwards and a long drop downwards. Okay, so these are significant swing highs and lows. So you can see here the triangular patterns, right? Significant swing highs, swing highs, swing highs, swing lows. Okay, then we should follow market structure, clear downward movement. So from the point 1 to point 2, you draw from the top to bottom, and you can see that the fib retracement trend line follows the price movement. It tends to work better on higher time frames, for example, H1 onwards. Okay. All right, so this is something that is wrong in a sense that fib retracement should not cut through two large areas of the market structure. You can see right here, it cuts through this whole downward movement, right? So you shouldn't draw from this low to this high. If you want to draw it, you can draw it from this low to this high. Okay, because when you are drawing fibs, it should not deviate too much from price movement. Okay. Also, this is a very clear market structure. You can see the highs, the lows, the highs, the lows. Okay. So what is an unclear market structure? You can see for this market structure is very messy, and this is, like you can see right here, is ranging in an uptrend, but it's making very small movements, very narrow movements, and we can only see maybe this swing high right here, but this movement is too close in a sense that there isn't a proper price movement here. It's just price spiking up, maybe because of news. Okay, then you can see right here, very small movements over here. Okay, so what are the what are the different retracement levels? So the different fib retracement levels, all right, so 100% to 0%. So we can see that there is the 23.6, 38.2, 50, 61.8, 78.6. Okay, so your extremes are your expansion levels. So the negative 61.8, negative 27.2, and then we have your extension levels, 127.2 and 161.8 extension levels. Okay. So you can see right here, this is your range of fib retracements from 0 to 100%. Okay, you can see your positive fib retracements, which is greater than 100%. 127.2% is over here. And then the expansion levels are below the 0%. Okay. So what are Fibo extensions? Okay. So Fibo extensions are above the 100% level. All right. So what the two that are used would be 127.2 and 161.8%. All right. So you should always look for a Nike tick to find these very powerful setups. You can see a Nike tick right here. Okay. So once it goes past the 100% level, you should watch for reactions of the 127.2 and 161.8 in this GIF over here. Okay, starting point, you see ending point, Nike tick, right? All right, and then you are plotting, you can see you are plotting the fib retracement tool. All right, then price actually reacted off the 127.2 first, and then it broke past and reacted to the 161.8. So you can see, right, very nicely reacting there and then going downwards. Okay, So you can see price reacted twice actually, and then came down and broke past all the way back to our midpoint. All right, so FIB extension levels. So this is example number 1. So you're drawing your starting point here and then your ending point here, right? And then price actually, see in the Nike tick over here, price actually reacted here at the 161.8 FIB extension level, and then it reversed all the way down. Okay, so it's very important. Always look out for a V shape between point 1 and 2 and 3 when you are trying to use the 127 and 161.8 retracement levels. Okay, so this is example number 2. So example number 2, we can see right here, we are drawing this, we can see a peak over here, right? If you go down to maybe the lower time frame, okay, you can see this rejected wick over here. You can draw this 100% to your lows right here. And then we can see that price reacted off the 127.2% extension level, also because we have a major swing high over here. Okay, so price will always react. Just remember, price will always react to major key levels and then your retracement levels. Okay, so try to look out for your key levels first and then your retracement levels. Okay. All right, so just to zoom in, we can see right here that price reacted very nicely. Bodies all closing below the 127.2 extension level and then reversing downwards. Okay, then we can see right here, we are drawing from this low, right, to this high. And then we can see price actually broke through the 127.2 extension level and then came all the way down to the 161.8 extension level. So right here, you can see price reacted very nicely and is going to the upside right now. So the next one I'll be going through with you is expansions. Okay. So for expansions, Fibonacci expansions, right? So for Fibonacci expansions is less than the 0%. Okay, so the two expansion levels that we will take note of will be negative 27.2 and negative 61.8. So we should always look out for a flash zigzag when identifying these Fibo expansions. Okay, so one thing that we have to know is the clearer the movement of the zigzag, the better. And we ideally need to wait for prices to retrace at least 50% in 0.3. Okay, so at least 50%, right? Price coming down here, retracing 50%, and then before taking off in the other direction. So we are expecting a sell right here at the negative 27.2 expansion level. Okay, so the best situation would be that you are looking, let's say you enter a buy right here, and then you are buying all the way, looking for it to break here to go to the negative 27.2 expansion level, right? Then once price has very nice movement upwards, you can sell at the negative 27.2 expansion level. Okay, so we should watch out for the reaction of this level. You can see price tapped this negative 27.2 expansion level and then came all the way down. Okay. So the first example of the FIB expansion would be, so your starting point is here. Okay, and your ending point is this swing low right here. Okay, so price actually retraced up to the 61.8% level. So that's the criteria. So remember the criteria is to retrace at least 50%, right? So price retraced all the way to the 61.8% FIB level. And then what we're looking at is that price could come down to this negative 27.2 expansion level. Okay, so let's just see how it plays out. Okay, you can see right here that price actually came down to this negative 27.2 expansion level and then bounced up really nicely from this area. Okay, there you can see that price usually comes back to the ending point, right? So your starting point, ending point, right? So it came back to this swing low support level, which because it was acting as a pullback resistance. Okay. So this is something that you can take note of. So maybe let's say you enter right here. Your first take profit could be at the ending point, and then if it breaks past, then your second take profit could be at the 23.6% FIB level right here. But since it already broke past and then reacted off here, this whole Fibonacci retracement will be taken out, and this level cannot be used. So you should identify the next key level instead. Okay. All right. You can see. Okay, so you can see right here. Right, take note of the shape of the flash. So make sure, right, zigzag here, right, and then price has didn't close above this high, so it retraced at least more than 78.6% of the FIB, and then come down. Okay, so it broke past this low, so that's your second criteria. Broke past this low, then bouncing off this negative 27.2 expansion level. You can see right here, all the different weeks, price didn't even close below this negative 27.2 expansion level and flew up. Okay, so next, all right, so the fourth example. Okay, so in this GIF, take note of the shape outlined by the orange arrow. Okay, price retraces more than 50% of the Fibo trend line, and in this case, more than 100%, and reverses nicely off the negative 27.2 Fibo expansion level. Okay, so this is an exception whereby it actually retraced more than 100% of this Fibo trend line, came all the way back up, and reacted off this negative 27.2 expansion level. Okay. All right. So what are Fibo projections? Okay, so very simple. Fibo projection should not be confused with Fibo retracement. Okay, so because Fibo projection uses 3 points, while Fibo retracement uses 2 points. All right, so Fibo projection percentage use will only be 61.8, 78.6, 100, and that's the max. Because 127.2%, 161.8, and 200% are only 127.2 is weak, can only be used as a supporting argument, while the 161.8 and 200% are more often used in Elliott waves and not such simple tools. Okay, you are usually looking for a flash zigzag, same thing in this type of Fibonacci retrace projections. All right, so you can see we have a 100% FIB projection right here. Price actually touched this area and then go up. So for FIB projections, you are taking the vertical distance from 0.1 to 0.2 and project it from 3 onwards. Okay, so 3 onwards, then here you're projecting it downwards. Okay. All right, so here's a simple example. You can see clearly the starting, the middle, right, and ending points follow the swing highs and lows of the price. Starting, middle, and ending. So this will be your start, your swing high, your swing low, your middle, and lastly, your last swing high will be your ending. So FIB trend line should follow price movement closely and should not deviate too much from the trend line itself. Okay. So you can see right here, starting, middle, and ending, right? So we project the Fibonacci as a extension right here. So if you're drawing from this swing high to this swing low and this swing high, right? You're projecting that price will come all the way down to this area. Okay, so the 78.6 FIB extension is a really strong level too. Okay, pro tip, always look out for big zigzags. Okay, the bigger the zigzag, the better in not necessarily have to be big, but it is more accurate in a sense that price wouldn't price will be more accurate. Okay, so for this one, we can see the price actually came down and touched this 78.6% FIB projection and then went all the way up. It is possible for you to trade this down move right before buying here, but it may be slightly riskier for those that are not too experienced because you may not know where the key levels are or like basic market structure, etc. So you should only enter a trade when you're confident and you know that this level is able to this level is the projected level that what's this FIBO projection is telling me. So I will enter right here. Okay. All right, so this is another example. So take note of this zigzag shape once again. So you can see this big, very, very big zigzag shape, right? So this time it is inverted, meaning that you're starting from the bottom to the top. And back to the bottom. Instead of top, bottom, top. This is bottom, top, and bottom. Okay, notice the clear movement in price structure, which our FIB projection trend line follows. We are projecting to reverse off the 100% FIB projection right here. And then let's see how it plays out, okay? So you can see right here, price actually reacted off the 100% FIB extension level and reverse all the way down. Okay, so when does a FIBO retracement become invalid? So one of the common scenarios of this is when price makes a lower low. So okay, lower low. And then assuming you are drawing a FIB retracement from the top to the bottom. Okay. If there are bars on the right, they break your ending point, it becomes invalid. Okay, there are FIB retracements that are negative, which I mentioned previously, negative 27.2 and negative 61.8. And we will touch on this as they basically go beyond your endpoint, yet they are still valid. Okay, you can see right here in this picture, this price actually broke this low, right? So it shows that price is now, so this FIB cannot be used unless you are projecting a expansion level, right? But for expansion, because price didn't retrace back to 50%, then we cannot use the expansion. Okay, always remember to pick the lowest point with nothing on the end of your ending point. All right, so confluence levels. How can we combine your FIB levels? Okay, so multiple FIB retracement levels lining up together right here. And then you can see we have the negative 27.2 FIBO expansion level. So it's this movement down right here. And this could increase the probability of a bunch of FIB retracement levels working versus a single FIB retracement level working. So you can combine these FIB retracement levels and you have your FIB confluence levels. So that's why price actually bounced off the FIB confluence area when there were 3 confluences in this part. Okay. Right here, this is the same. Okay, the third one will be your 61.8% FIB projection and and 127.2 FIB extension. Okay, so you can see right here, you project from this high to this low to this high, and then you can project that price could come to this 61.8% FIB projection level. And then we also have the 127.2% FIB extension level. Okay. All right, so same thing, but this one is kind of inverted. Okay, so you can see right here that if you draw from this high to this low, so your 100% will be right here, because there is your your 100% feed projection will be right here. And as for feed extension level, oh sorry, here, this circle area. So your feed extension level will be this negative 127.2% extension level. So while these two are working together, right, and this area right here, I will assume that there is a swing high on the left. That's why price actually make such a dump right here. Okay. All right, so we can see right here your negative 61.8% FIB expansion and 161.8% FIB extension. Okay, so negative here. And then negative, and then the 161.8% FIB extension, because you can see price actually broke past the negative 27.2 and then followed by the 127.2%. Okay, so right here we have our projection level, right? Top, bottom, and top. So this shows feeble confluence and then negative 27.2% expansion and 127.2% FIB extension. All right, so trade management with feeble confluence. So a stop loss beyond a key confluence area, price is attracted to such stop loss. Price is attracted to such strong areas of FIB confluence. So if your stop loss is right here, right, instead of buying, you will most likely get stopped out before the market reverses. Okay, so for your take profit, it will be for take profit, very simple. Take profit target before a key FIB confluence area, because when price reaches the Fibonacci area, there's a high chance that you will not be able to go beyond it, and instead of reaching your profit target, it reverses back to even worse, your stop loss. Okay, so let me just go through with you guys. The charting itself. Okay, give me a second. Let me shift this out of the way. Okay, so what are we looking at? Let me look at this chart right here. All right, you can see price has already broken this 23.6% FIB FIB retracement. Okay, then price could come down to a level. Let me try and draw it. Give me a second. I can adjust this. Okay. Right. So we have a very nice shade over here. All right, so we can see previously price reacted off this 78.6% feed retracement and 78.6% feed projection, right? Not sure if you guys can see this. We just filter this out. Okay. Yep, so you can see right here, once price comes back down again, right, I'm very inclined to buy. Okay, because buying off this area will be a good area since there is feed confluence here, the 78.6 feed retracement and 78.6 feed projection. Okay, so let me see. Right about just now, let me see. We don't have. Hold on, guys. Let me. All right. So just now, okay, so right now, you can see we have the 61.8% feed projection and 78.6 feed retracement right here at the same level. So that's why I was inclined to take a buy at this block of this rectangular area over here. And then I was taking a buy, all right, did a quick 1.5% in a couple of minutes because there was G30 was moving really fast. Okay, so this for G30, right here. If I were to enter a buy trade here, right? Seven, 8, okay. Yep, so this area, we also have the 100% feed projection over here, which shows that at this swing low, which shows that this swing low is pretty significant and you shouldn't take it too lightly because with the combination of these factors, right, it shows that there is feed confluence here. All right, then you can and then you can actually take a position right where you feel that it's gonna go up. Okay, so for US 500, it's very, very simple. Very, very simple. Basically, price will come down to this 38.2% level and then go up. All right. And then your second support will be your 61.8% retracement level. And then you're buying the pullback as well. So this is one pullback level. This is another pullback level. Okay, so right, you can see right here that if price came down, right, retrace at least 50%. Okay. All right. Let's see this. Okay. All right. So let's move on. EURGPY. EURGPY. So euro, pound, dollar. So this is very simple. Basically, that we have our 78.6% level, right? Along with this multi-swing high resistance level. Okay, then we also have the requirement whereby price needs to retrace at least 50%, right? So that's why we can see price is trying to reject this area and come down. Okay. Then lastly, we have this retracement levels, and then we have our 61.8% feed projection going on. Okay, so yeah. Okay, there's a possibility that price may react off this movement because you are not able to take maybe on the 1 hour time frame, you are able to do your do a good one right here. Okay, but then you can see that if let's say you wouldn't want to draw from this area, this highs, and then all the way down here because price will be cutting through, right? So the less cut, the better. Okay. All right. Let me see. All right. So let me just find maybe a couple more example. Then in like maybe 10 more minutes, then we can end the webinar. Okay. So just bear with me for a little bit more. I know it may be slightly confusing. If you guys have any questions, just type it in the questions box, okay? So that I will know what to go through with you guys. Okay, so let's just take a minute to think about anything that you want to ask so that I can answer it as well because usually sometimes people have a lot of misconception on Fibo, and sometimes Fibo the price has already closed, right? So for example, right here, we can see that price broke past, right? Supposedly going to form a head and shoulder pattern, but it broke through and went even higher. Okay, so that is something that you guys should take note of. All right. You guys have any pairs that you want me to go through with you? Feel free to send it in the Q&A box. Okay, so I'll be able to get to them. Okay, if you guys have no questions, then let me just move on. All right. Okay. Let me see where else I can show you guys. All right, so for here, let's say you are GBP, right? What we are expecting would be, right, price has already retraced 50%. Okay, so you shouldn't have to use, I think price is now reacting to 61.8. Yep, price is reacting to 61.8% fib retracement. Okay, this one should also be 61. All right, so what we're looking at for EUR GBP, ideally, for it to come down, right? Worst case scenario, right? You can see right here, the first support level, we have this negative 27.2% expansion level, right? Okay, so if let's say price does this, right? So once it completes this move, let's say price is here, then you can use your projection to see where price can go. So this high, this low, and this high. Okay, so if you have this tool right here, you can easily find something which is the 78.6% Fibo projection level. Okay, so once you have this, then you will be able to see where price could lead up to. Okay, so from here, same thing. Let's see, zigzag. Zigzag, right? Okay, so we will draw from this low. Oops. Okay, but yep, you can see right here that maybe this swing low is the one that is closest to this negative 27.2 expansion level, okay? But try not to squeeze your key levels onto your fib levels, because if you try to squeeze, right, then it will not be as effective, because your key levels should always come first. Your graphical key levels should always come first, and then followed by your fib retracement levels. Okay, so this is just something that you guys can take note of. Okay, so what else can I cover with you guys? Let me see. Okay, so far, is everything okay? You guys have any questions? No questions? Okay. Because it may be if there's no question, I would maybe assume that everything is okay. And then if you guys are unclear of any explanation that I went through with you, just feel free to voice out and then let me know, and I can address it to you guys, okay? Because if not, um I would assume that you guys understand, right? So if you guys understand, maybe I can get a reaction. So like a thumbs up or type it down is fine too. Don't have to be shy because it's just us. Okay. Okay. All right. Let's see, 4 hours. Okay. Yep. So for example, right, sometimes when you're drawing fib retracement levels, sometimes it's okay if price maybe cut through a little bit, because you should refer to the daily, right? If the daily shows that is a very nice movement, right? Then you can draw it on the daily. You draw on the daily, and then you can come to the H4 to see if it's okay. Means price, it doesn't deviate like maybe too much here, then come down, cutting through, etc. Okay, so sometimes cutting through a little bit is fine, but not too much. Okay, so this is something that you guys can take note of also. All right, then next, what else can I cover with you? Okay, so sometimes you may be able to see projections, like for example here, here, and here. Bigger projections are always easier to see rather than the smaller ones. So let's take maybe Bitcoin as an example. Okay, sometimes you may not be able to see such movements. So let's see. Okay, sometimes rarely, but sometimes if I can't really see, I will use the line chart, and then I'll pick these lows right here. Okay, and then I will draw to the highs over here, and then to the lows. Okay, just to make sure that I'm not missing out the peaks, because on the line chart you can see that these are the max of the candlestick, right? Right, these areas. So you can see very nicely, right? If I use the freehand tool and draw right here, right here, and right here, right? And then it will line up very nicely with the body of the candle. Okay, so this is something that you guys maybe could use. Okay, let's see what else I can share with you guys. Okay, so just remember that your expansion levels, your negative 27.2% is the strongest is the stronger one compared to the negative 61.8. And also for the extension levels, the 127.2% extension level is stronger than the 161.8 extension level. Okay, and your 61.8% for your fib retracement level is your golden ratio. So usually price tend to react a lot more there compared to other levels. Sometimes for example, your 23.6% level is pretty weak. So sometimes I don't really rely on the 23.6% level. Okay, but more often it reacts to the 61.8 and 78.6. Okay, for the 50% is more or less it works pretty well also, but it works on maybe, let's say, pullback supports, so pullback support levels. So that's what I noticed. Okay, so yes, let me see. Yeah. Yep, so this area is what I'm looking at for just an example, because we have Fibonacci confluence here. We have our 78.6% retracement level and 61.8% projection level, and then we are looking to buy this move upwards. Okay, so this is so you don't have to be afraid, you just have to be brave, and then you can be able to find optimal entries right here. Okay, all right, so yes, that's all for today's session, and I hope you guys actually learned something new and are able to understand retracements, projections, expansions, and extensions. Okay, so this is a whole crash course on Fibonacci itself, and I hope you guys are able to use it properly and use it well, so that you won't be able to find it misleading or whatnot. Okay, so thank you guys for tuning in to today's webinar, and I hope you guys have learned something new if you haven't. Okay, so thank you for being attentive, and I appreciate your time for listening to my webinar for today. Okay, so that's all I have for you guys. All right, take care, and I'll see you guys in the next webinar. Bye bye.